This is the #1 way people lose money on their commercial real estate investments. What's up, hungry investors? Welcome back to the channel. If you're new here and you're serious about commercial real estate investing or just exploring your investment options, you're in the right place. Today, we're jumping headfirst into the foundation of successful investing: commercial real estate investment financial analysis. Try saying that 3 times as fast as you can. Okay, where were we? It's where the numbers meet strategy and where the real magic happens for investors. By the end of this video, you'll understand exactly how to evaluate potential investments and navigate the risks so you can make smarter, more informed decisions. Are you ready to feed your appetite for investing? Stick around to learn more. First, let's break down some fundamental concepts that you need to know. Number 1, net operating income. This is basically the property's total income minus all the operating expenses. Number 2, capitalization rate or cap rate. Think of this as your potential return on investment calculated by dividing your NOI by the purchase price. Higher cap rates usually mean higher returns, but also higher risk. Number 3, return on investment or ROI. Your overall profit expressed as a percentage. This is your ultimate goal. Understanding these is essential before moving on to more advanced analysis techniques. Now, let's talk about evaluating potential returns. Commercial real estate isn't just about buying and holding. It's about understanding the dynamics that drive profit. Cap rate analysis is a key factor in assessing the value of a property. A lower cap rate typically means higher property value or lower risk. But be careful, always compare cap rates within the same market and property asset class. Next up, cash flow analysis. You want positive cash flow, meaning your property is making more money than it's spending. But if you're dealing with negative cash flow, you'll either need additional income sources or to consider refinancing to cover expenses. And don't forget about property value appreciation. While it's not guaranteed, properties in growing markets or those undergoing strategic renovations can increase in value significantly over time. But investing isn't just about the numbers. It's also about managing risk and doing your due diligence. Make sure to conduct environmental due diligence to avoid properties with costly hazards. Check zoning and land use regulations to ensure the property can be used as intended. And don't skip the legal review so you can uncover any potential issues like liens or disputes. Finally, always get comprehensive insurance coverage to protect against property damage, liability, and business interruptions. And of course, don't forget diversification. Spread your investments across different property types, locations, and tenants to minimize risk. Tax implications can also have a huge impact on your investment strategy. Depreciation, 1031 exchanges, and opportunity zones offer ways to minimize or defer taxes, but it's important that you consult with a tax professional to maximize those benefits. To illustrate, let's look at 2 case studies. First, we have the urban warehouse conversion. An investor buys an old warehouse in an up-and-coming neighborhood. The investor renovates it into trendy loft apartments and sees both property value and appreciation and consistent rental income. This investment turns out to be a huge success. On the flip side, there's the multi-tenant retail pad in an out parcel of a dying mall. Despite efforts to revitalize the vacant spaces, the investor is faced with ongoing tenant turnover and eventually has to sell the property at a loss. This highlights the importance of market research and anticipating broader issues within your investments. So what's the takeaway here? Commercial real estate investing is rewarding, but it's not something you can rush into without doing your homework. Successful investors take a long-term approach, doing their research, managing risks, and staying informed about market trends. Stay on top of market trends and always consult with professionals like real estate advisors or attorneys. And don't underestimate the power of networking. Building relationships can open doors to opportunities you might not find otherwise. That wraps up today's guide to navigating commercial real estate investment financial analysis from a broad perspective. Join the conversation. Leave a comment below with your thoughts on how you plan to take this information and use it to help evaluate returns on commercial properties that you're looking at now or in the future. Thanks for joining me and watching this video today. If you enjoyed the video, don't forget to like and subscribe for more commercial real estate insights and information. See you next time, and as always, stay hungry, my friends.